Welcome to TradingPub.com's morning report. Real quick before we get started, give you a standard risk disclaimer. As you know, when you start talking about futures and options products, there is substantial risk involved. We're not making any kind of recommendations here, just kind of going over some thoughts over some of the different markets that we watch throughout the week.
Hello, everyone. This is Tony LaPorta with Trading Pub. Morgan's asked me to come on this morning, and I just do whatever I do best. And what I do best is when I give these sort of demonstrations, shall we say, and I talked about this. Morgan's father, Tom, on Tuesday night did a presentation on election night, and Tom asked me to come in and speak, and that was before these 2 days here were present. And I came in and threw out a warning flag, because what I'd been seeing in the market and what I know about the market is, I write about this all the time: never, ever underestimate the power of the bear. The bear can undo years of hard work in a matter of months. The bear can undo months of hard work in a matter of weeks. The bear can undo weeks of hard work in a matter of days. And you can see this big move here since September 21st to today's low, and this still is going. November 8th, what is that, about 6 weeks? You go back here, the last time we traded this low was in May. So basically, in 6 weeks, the bear has just undone 6 months worth of hard work, and that is what the bear is all about. But what I'm seeing here, and what I've written to my people about, what I believe in, what I've said over and over and over again is, and I've said this from day number one stock does not make a market. And this stock right here, Apple Computer, has proved me wrong all year long. This stock closed on December 30th, 2011 at $405 a share. On September 21st, this day right here, it traded to a high of $7.05. That is a $300 move. A $300 move on a $405 stock is a 75% return on investment. Apple was up 75% in 2012. There are fund managers out there that don't make 75% in a 10-year period. And this stock was up 75% in 2012. I said it then, I will say it now. I felt it was a bubble, and now we're seeing the air let out of it. So what do we have here? We have this big move down. This red line here is the 200-day moving average. And we had 3 consecutive closes below this. I'm a technician. I believe in 2 consecutive closes on a breakout, either higher or lower, gives me confirmation. And on this night right here, which was election night, I came into the DTI trade room and I spoke about the longer this market trades below the 200-day moving average, the more bearish it becomes. And what we have now, and this is the chart that I actually put out last night to my readers. So today I can do this quick little edit. Let's take this word right out of the game. This is not a possible measuring gap anymore. This is a measuring gap. And what you do with a measuring gap, you measure, because what it is it's a measuring gap, as I've written here. A measuring gap is found during a rapid straight line price move. The gap represents the midpoint of the price trend. So you can see that this is a rapid move. What you do with a move like this is you measure from the breakout area. So basically, we kind of had this congestion up here, and the market broke out right here. So I've gone back to this high here because we had a return to the breakout area, and this high here is 652 to 653. So you measure from 652, let's call it 652. You measure from 652 to the middle of the gap. And the middle of the gap is around 593. So 652 to 593, do the math. That's $59. That's 593. I'm sorry, that's wrong. That's not 593. That's 577. 577 from, I'm very sorry, I need to get this again. 652 to 577 is 52 and 23 is $75. So from 577 subtract $75. Okay, so my math is off. The objective is 502. It depends on where you did your math. It doesn't matter. The objective is a lot lower than where it is. And I put this chart out last night, and Apple's down another, what, $10, $11 today. So I was in the DTI trade room this morning, and I saw Apple open up $3 to $4 higher, and I'm screaming, Apple is higher, sold, sold, sold. What I told all my readers back in 2008. And if you're interested in having a look at my commentary, Morgan has links on his website for it. We have quite a few subscribers, and we're throwing out a special at the moment that ends in 2012. There will be a huge, I'm doing a huge webinar on December 9th. No, December 8th, Saturday, December 8th. And I'm looking to do at least 1 hour plus webinar, something similar to this, where I put up a big chart like this, and then we talk about it. And we will talk about anything from Apple to the Treasury bonds to the complex head and shoulders top in the Nasdaq, which appears like we're going to be meeting that objective sometime today or tomorrow. But anyhow, the objective here is somewhere around $500. And as you can see, the stock's trading 543. If the stock market jumped on Apple's coattails on the way up, it's definitely jumping on Apple's coattails on the way down now, and there's some money to be made being short this market. I have a lot of other great ideas that I'll be sharing in my December 8th webinar, and we have some major reversal patterns at the moment in all the indice markets, and these are pointing to much lower prices to come. So that's all I have for you today. I thank you very much. Thank you for coming to the pub. And that's it. This is Tony LaPorta with Trading Pub, signing off. Thank you very much.